Want to see someone systematically disprove everything you have read about trading stocks and expose how and why you will consistently lose money if you aren't doing it right? Click the link in the description to check it out for yourself. But now for today's video.
The question, what knowledge is needed for trading in stock markets? Answer by Shrish Nanda. Indian stock market is one of the best investment option in the world. Here the businesses are operated on a conservative mode. Even the investors are picky in stocks choosing. This primary factors makes the Indian stock market investment worth a try. You need to be able to do some basic math. No algebra, no trigonometry. Just simple calculations like additions, subtractions, multiplications and division. Understand probability and statistics. This one is my favorite. This is where you go from a gambling stock picker to confident stock trader. Let's look at the definition of probability. It is a strong likelihood or possibility that an event will occur. When you put probability and statistics together in the stock market, then what we do every day is go out in the marketplace and look for trades that have a probability, likelihood, of doing what we expect it to do in a given time frame, given some sample data, which is normally price action and data derived from candlestick charts. Ability to read charts and spot trends. This is one that I teach in my course Foundations of Stock Market Trading. You need to learn how to read stock charts and spot trends. There are certain trends that show up in a stock chart that will allow you to predict, with a certain level of accuracy, where the stock is going and how long it will take to get there. Calculate risk versus reward ratios. Do you know what you're risking for what you are planning to gain? Notice I did not say for what you are hoping to gain. If you mastered reading charts and applying probability and statistics, you should have a solid plan for your trade with well-defined risk/reward ratios. You should know exactly what you stand to lose in comparison to what you plan to gain and be okay with that level of risk. Need to have a game plan for every trade. We just mentioned this briefly, but most people do not have a game plan for every trade they enter. Here's what a game plan should consist of. Defining where support and resistance is. Determining your entry and exit price. Determining your entry and exit strategy. Calculating your risk-reward ratio. These are some of the things it takes to become a successful stock trader. When you mix who you have to become and the tangible skills that it takes, you get a well-rounded picture of how to become a successful trader. If you continue to master these skills, you will be successful. Even if you master all these skills, the brokerage structure of many brokers doesn't allow the trader to gain big. You'll be losing so much money in the name of brokerage. So it is better to have your trading and demat account with an online discount broker like Zerodha, because Zerodha will charge you only 0.01% or RS20/executed trade and delivery charges at zero brokerage or free brokerage. Even being the award-winning discount broker, they charge you very less brokerage that will leave you with heavy profits. They have a customer-centered business model and are striving to be the best in the sector. Click here to know about Zerodha products. Click here to open an account with Zerodha using your Aadhaar card in 2 minutes. Answer by Ashwin Ramani. There are some basic stuff which you need to know if you want to start trading in stock markets. Everyone would have a different view. What I'm about to mention is solely based on what I think. Know the difference between technical analysis and fundamental analysis. Both are different. I won't waste your time writing about it here. There is enough content on the websites about the same. There are different types of charts. Have an idea about what charts are. For trading, you would be looking at a lot of charts. Understand what trends are. There are 3 types of trends: uptrend, downtrend and a sideways trend. Just by looking at the chart, you should be able to know the trend. Know what candlesticks are. Again, there are a lot of candlesticks out there. There are some few important candlesticks and you would want to know about the same. What are time frames? People use different time frames as per their strategy. For example, some use an hourly chart while prefer daily chart or a 15 minutes chart. Know what options are available out there for you to trade. You can trade equities, futures, options, commodities and currencies as well. Make sure you difference between these. Understand why do people trade these different segments. Have an idea about the risk and the reward involved about the same. The most important part. Learn how to place a trade. Forget about the strategies and techniques here. I know a lot of them who don't know to execute a trade. Know how to buy, how to sell, how to place a stop loss order, how to place a target order, how to modify an order, etc. You may know the techniques, but if you don't know how to place a trade, knowledge about that technique makes no sense. A basic knowledge about different tools and indicators that are available. No need to understand all in depth, just need to be aware about it. Now you need to know what makes a stock move. It is nothing but pure demand and supply. Higher the demand, higher the price, which will lead to the stock going up. Just economics. I think this is enough. Now you can learn about different strategies and techniques. All the things I mentioned above are the basic requirements before you start trading. Again, it can differ from people to people. So what do I do before taking a trade? I first decide which stock am I going to trade. Then I decide the technique I'm going to use. After that, I decide which chart I'm going to see. Following that, which time frame am I going to look at? After I do my analysis using tools or indicators, I then see which segment am I going to trade? Whether equity or futures or options. Lastly, I log into my trading account and place a trade. See, it is that easy. Answer by RP Pauser. Trading procedure is very systematic process in which there are many rules and regulation to perform the deal with integrity. So every trader must have known all the trading rules and free stock trading tips, otherwise they can deprive of the benefits of trade. We are presenting some important rules below. Rules about market timings. On the intraday trading, the offer period for sale shall be according to as per the trading hours to the secondary marketplace and shall not go above on a trading day. The process of ordering strike on the exchange shall be performed only during trading time period, i.e. 9:00 am 3:30 p.m. for an equity market. Rules about order placements. Buyers, all traders registered move in the trading market with the brokers of the aforesaid exchanges other than the supporter group entities. No price change shall be valid for the orders that put in the sale offer. The limit orders also shall be permitted. A single buyer is permitted to perform a multiple order. When floor price is disclosed, the required orders lower than the floor price shall not be permitted. When shares are to be under proposal for sale, then the trading in the standard market shall also maintain. The different window for the sale of shares by OFS shall be built. The given orders shall be suitable in the OFS window. Trading orders of 100% of margin compensated front by institutional trader and non-institutional traders. These kind of orders can be changed or rejected at any market session. Trading orders of charging upfront margin through institutional trader only. Here these kind of orders cannot be changed or rejected by the traders or stockbrokers, but for creating an upward adjustment in the price or amount. The increasing bid quantity will be created available online in the market during the trading time period at definite intervals according to the orders of 100% upfront margin and individually according to the orders applied with no any upfront margin. Analytical price is the capacity weighted average price of all the suitable bids. Analytical price shall be released to the market all over the trading time period. The analytical price shall be evaluated according to all valid orders.